if I make a reflection over the past 4 or 5 years, when the crisis started, there were 2 years when the market was clearly dominated by German banks. French banks were very much on the sidelines, serving their existing clients. But that was a very short period of time. That was, I would say, 2008 and 2009. 2010 and 2011 was a period where you had, first of all, a return of the French banks, and also a lot of club deals and also mixed pools between German banks and French banks, still, I would say, dominating the market. In 2012, there was, I would say, a new area commencing, because all of a sudden there were new players also subscribing large ticket. There was a refinancing of Lumière that was almost 500 million done for Tishman Speyer, done by, in the first place, by insurance companies. There was a refinancing for the French telecom portfolio, 275 million provided by a German insurance group. And this trend is continued to happen. What we see right now is that insurance companies and banks are teaming up in club deals. So it is not banks or insurance companies, it is, or debt funds, it is club deal which are composed of different parties. We had a big closing in the month of April. That was a refinancing for LBO. That was a 625 million deal. And there you had a fixed rate line, which was mainly subscribed by banks, and then you had a floating rate line, which was subscribed by banks, and a fixed rate line that was subscribed by insurance companies. I think this is the current trend at the moment, that you will see more and more a mixed pool of lenders, also non-traditional, non-banking lenders, getting into those pools. Of course, there are also debt funds coming up. Most of them still focusing on core products. However, there are more and more also being set up for core plus and even opportunity type of investments. I think the investors at the moment, they don't necessarily have a big problem to find a decent financing. It depends on their horizon. If they have seek financing for 7 or 10-year term, they may seek for a classical banking or an insurance solution. If they have a short-term view, then they will go for a more maybe opportunistic debt fund solution. I think there is a variety of players at the moment, and capital for lenders is, I must say, is going to be more and more available, even for non-core financing. Last week there was a big acquisition of Tishman Speyer, a property in La Défense for 50,000 square meters. Not necessarily a core financing in a classical sense, but also it was financed. So I think the lack of core plus and opportunity financing deals in the market is more a result of the lack of investment opportunities in this area. But as soon as those investment opportunities and the investors are coming back, I think lenders will follow.